Hi everyone, in this video I'm going to do a comparison which stock is a better buy, Alphabet, Google, or Meta Platforms, Facebook, comparing the two tech stocks, advertising giants on several different metrics and coming up with the conclusion, a recommendation saying which stock is a better buy right now. So let's get right into it. The first metric I have here is comparing Meta Platforms stock and Alphabet stock on revenue growth, annual revenue growth. I have 10 years of history here going back in terms of annual revenue growth and quarterly revenue growth. And what we see here on the top, purple, is Meta Platforms, and over the last 10 years, it's been growing revenue faster than Alphabet until recently, until the very recent year, in both quarterly and annual terms, where Alphabet has gained the advantage here. In fact, Meta Platforms in its most recent 2 quarters actually experienced decreasing revenue growth. And this is due to the headwinds mostly from Apple's privacy policy changes. They're impacting Meta Platforms more than they are impacting Alphabet, and that's causing a significant slowdown in Meta Platforms. So longer term Meta Platform had the advantage. Going forward, I would say Alphabet has the advantage here in terms of revenue growth. The next metric I look at here is the operating profit margin on a trailing 12-month basis, going back all the way before 2014. And we could see here again, Meta Platforms having the advantage over Alphabet for a long time, but that advantage again narrowing in the most recent year, in recent quarters. Again, like I mentioned earlier, due to the privacy policy changes from Apple, and also here for operating margin, this is also impacted from Meta Platforms' decision to invest aggressively in becoming a metaverse company. They've already invested over $10 billion, and they've signaled that these investments are only going to increase over the next several years. This is impacting their operating profit margin, and it could reasonably be expected that over the next few quarters, Alphabet's operating margin will exceed Meta Platforms, and investors would not be surprised from that change in advantage in operating profit margin. The next metric I look at here is the percentage of cash flow from operations to sales. In other words, how much of sales revenue are Meta Platforms and Alphabet turning into cash flow, right? That's what we want to know as investors. How much of the sales are turning into cash? And looking at it in the trailing 12-month terms, going back before 2014, again, Meta Platforms doing a better job than Alphabet in converting sales into cash flows, holding the advantage over the long term, and still, even though the advantage has narrowed in recent quarters, still significantly ahead of Alphabet here. All right, another metric to look at here is shares outstanding, or shares of common stock outstanding, and I've looked back all the way to 2014 here. This is especially important if you're looking at tech stocks or at growth stocks in general, because they tend to use what's called stock-based compensation. So they give their employees stock options or stock grants instead of paying them in cash. And that way it helps the company conserve cash during its growth phases when cash is more of a scarcity. But at the same time, it creates more shares outstanding, which decreases the potential for earnings per share. Okay, so if you're an investor and you own one share, the value of that share could decrease because there's now more shares outstanding. You're splitting the profits with more people, if that makes sense. You're splitting the earnings among more individuals, and that causes a decrease in the amount of earnings per share. And looking at Meta Platforms and Alphabet, we could see here that Meta Platforms has been guilty of diluting shareholders in a larger degree compared to Alphabet, in a much larger degree compared to Alphabet. You see here the percentage change in shares outstanding annually. You see every year Meta Platforms is issuing more shares on a percentage basis compared to Alphabet. And in fact, in the most recent few quarters, Alphabet has actually reduced its share count. You see here negative 1.85%. This happens when the company buys back more of its stock than it issues in share-based compensation or in other share issuances. So Alphabet has the advantage here in this metric, a large advantage in this metric. Finally, the last metric I will look at is valuation. And since both of these companies are profitable on the bottom line and generate positive free cash flows, I chose to compare them on a price to earnings and price to free cash flow basis. And again, Meta Platforms is in the purple and Alphabet is in the orange. And we see both in terms of price to free cash flow and price to earnings, Alphabet is more expensive than Facebook or Meta Platforms. In fact, it's almost twice as expensive. Meta is trading at a price to earnings of 10, Alphabet at 19. Meta is trading at a price to free cash flow of 11, and Alphabet is at 20. All right, so Alphabet is more expensive than Meta Platforms in terms of price to earnings and price to free cash flow. Okay, so now that we've considered each of the metrics to evaluate and compare Alphabet and Meta Platforms, it's almost time for my decision on which one is a better buy. But before I do that, I would like to recommend that you subscribe to my channel, because this recommendation is not going to be static. It's going to change over time as the company's comparative metrics change, as they announce earnings, as the valuations change. This recommendation is going to change. So you're going to want to be a subscriber to my channel to get that update when there is a flip in this recommendation. All right, so if you haven't already, please go ahead and subscribe. And without further ado, which stock is a better buy right now, Alphabet or Meta Platforms? I'm going to say Alphabet is a better stock right now. NASDAQ, GOOG, Alphabet, a better buy right now, primarily because of the elevated risks from the privacy policy changes by Apple and how that's impacting Meta Platforms business in the near term. We saw the revenue contracting, revenue decreasing year over year. We saw the operating profit margin contracting. So the two areas where Meta Platforms had an historical advantage over Alphabet are looking like that's no longer going to be the case over the next few quarters, and it remains uncertain how that's going to evolve for Meta Platforms, if that's going to get even worse, because it's not only facing those headwinds, but the company's also investing aggressively in the metaverse, which is also going to reduce its operating profit margin. So primarily due to the risk factors, the elevated risk associated with Meta Platforms stock, I would say the premium valuation for Alphabet is justified, and Alphabet stock is the better buy right now. All right, everyone. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.